Today's video, I'm going to cover BlackBerry stock because they have their Q2 fiscal year 2026 earnings coming out on September 25 at 8 a.m. Eastern time. Typically about 15 minutes before the conference call, they release the earnings numbers, and I live stream that the whole entire event. So during that, I go over the numbers quickly, try to see if they beat their forecasts and street estimates. Plus, I also live stream the conference call. So if you're interested in that, consider following and subscribing so you're notified when I do. And then also, I'm going to go over in this video, the forecast, street estimates, do a year-over-year comparison, quarter-over-quarter comparison, and go over a little bit of the technicals as well. Just to mention a little bit of the movement, limits, so on and so forth. And then in terms of the recent actions we've seen, because we've seen it go pretty much around the $3.80 where BlackBerry did a share buyback months back, and we basically from the last earnings went up and then started trickling down, unfortunately, but we went back down to $3.80, but not really went under 380 for the most part. And so 380 seems to be pretty stable based off of potentially the share buyback range that BlackBerry had the first time. And then now we went up to $4.40 US, which could be potentially, for example, RBC stating some positive for the earnings coming up, potentially forecasts being improved as well, potentially. And at the same time, I think BlackBerry might have started doing additional share buybacks because they have a certain limit to hit, they could hit within a year, and they haven't hit it so far. And they said that they might do multiple purchases throughout the year, for example. And I think right now here's a second purchase bulk that's happening right now. Potentially, it's not a guarantee. We'll find out more in Q2, but I'm sure. Now, if we're looking at the forecast, first, BlackBerry gave us a forecast outlook for Q2 fiscal year 2026, ranging on between 115 to 125 million. RBC, I believe, was expecting about 121 million or something like that. But overall, analyst expectations, if you go to Yahoo Finance, type in BlackBerry, you could see the estimates coming in at pretty much average estimate of 122 million, in my opinion. And then the high end is 125 million, by the way. In my opinion, I'm expecting them to beat this forecast that they gave anyway on the high end, anywhere between 125 to 130 million. So 125 to 130 million. There's a pro and con for this. So if we're looking at last year's earnings, just to show you, it is actually last year, September 26, 2024, Q2 for fiscal year 2025, they came in at 145 million. So even if they got 130 million, they would have a year-over-year decline, but it's not horrendous, right? So if we have, for example, the cybersecurity division has Silence removed from it. Now it's secure communications. It's mentioned as secure communications now. So Silence revenue is taken out of that chunk. You could see the big hit overall. For example, cybersecurity last year, same Q2, was 87 million. This year they're expecting, again, rebranded as secure communications, about 54 to 55 million. So pretty big chunk, and that's essentially from from Silence. Again, they sold Silence, relatively decent deal. And at the same time, there's another payment chunk that's coming in. And I would expect that payment chunk to come in more so for December's earnings, which I don't know if I mentioned, but the estimated time frame for the next earnings for Q3 is estimated to be reported on December 18, 2025. So expect that Silence portion. I believe it was supposed to be about 40 million coming in as well during the earnings. Or somewhere towards the end of the year, we'll be seeing that. So I'm expecting it to be that quarter, right? And now in terms of not necessarily a con, hypothetically, for example, what I was mentioning on, let's say 130 million and versus last year of 145 million. It is a year-over-year decline, but if you look at last year's profit or losses overall after all costs and everything, they reported $18 million of losses. So last year, same quarter, $18 million of losses. Now this year, they are forecasting a loss of between 5 to 15 million, hopefully closer to 5 million, or if anything, break even. Because if that is the case, let's just say they report 130 million plus pretty much break even, then that is way better than the 145 million and $18 million of losses of last year. So that's what I'm basically stating, that it's not necessarily that bad, even if it's year-over-year decline in terms of revenue. But if the balance sheet looks favorable overall, that's more preferable, because then we see growth. What I mean by growth is if you look at last quarter, so Q1 fiscal year 2026, the total company revenue came in at total company revenue came in at 121.7 million. So if we have the 130 million, you have quarter-over-quarter growth. And then yeah, year-over-year decline, but the numbers are more favorable in terms of they're keeping more cash on hand, if that makes sense. So that is the more favorable aspect. Now, QNX revenue, 55 to 60 million, which if we look at last year's QNX, it's pretty much flatlined from what I looked at earlier. So again, this is Q2 last year, September 26, 2024, and it came in at 55 million. Again, they rebranded, not again, but just to let you know, in case if you're not up to date, it used to be called IoT, now it's called QNX, same division, in essence is rebranded, and it's 55 million from last year for last year, and forecast is 55 to 60 million. Now, if they get on the high end, which typically the good thing is about BlackBerry, they are quite conservative on their numbers, and they typically end up hitting the high end or beating the high end. So I would expect 60 million. So you could argue it's year-over-year growth, which is pretty good. It is percentage-wise is good, but in terms of number-wise, you could argue it's on the low end, but it's still good percentage-wise, and you have year-over-year growth. So for that QNX portion. Now for quarter-over-quarter, if you look at this quarter that passed, they had 57.5 million for this quarter, Q1 that just passed. So technically, it would be quarter-over-quarter growth, year-over-year growth for QNX, and not even technically, it would actually be that case. Now for secure communications, like we saw earlier, unfortunately, it would be year-over-year decline because the silence portion is removed from this whole entire division. So obviously there'll be a hit, but last quarter we did have silence removed. But again, this company is more cyclical, so the quarters won't be necessarily the same in terms of the amount of money coming in per quarter, if that makes sense. It's because it is cyclical, contracts wise, so on and so forth. But security communications for Q1 came in at 59.5 million, and if they get 59 million, it's pretty much flatlined. And I'm typically expecting to be on the high side personally, but 54 to 55 million, again, if they get 59, they might even get 60. Hypothetically, even if it's 60, it is an increase quarter over quarter, but it's still pretty much for the most part flatlined, and then year over year declined. Again, we're in the 80 millions, I believe it was 87 million right there. Yeah. And then licensing revenue approximately 6 million. QNX segment adjusted EBITDA 10 to 13 million. Security communications adjusted EBITDA 3 to 6 million. Licensing segment adjusted EBITDA approximately 5 million. Adjusted corporate costs approximately 10 million. Total company adjusted EBITDA 8 to 14 million. Non-GAAP basic earnings per share break even to 1 cent. Operating cash flow usage negative 5 to 15 million, negative 50 million. And then it excludes amortized cost, by the way. Now the thing is though, the one thing that most people are looking for, obviously they want this revenue to be up, but the main thing is this full fiscal year 2026 guidance. Now if they adjusted higher, that is more favorable. The reason why it would be beneficial in essence though is because these numbers are, from at least what I've gathered, and by the way, I should note this, I always say this all the time, but be mindful when you're watching this. I do own shares in the company, so be aware that while you're watching this video, and I'm not a professional, so please do your own due diligence and research before buying and selling. I'm just sharing my opinion and thoughts overall and the information for pretty much what I'm gathering. But in essence, these numbers are quite conservative from what I've picked up on from the conference calls and all that stuff, just because of the nature of, for example, tariffs, auto sales, et cetera, slowdown of auto sales at the time, for the time being, of the uncertainty of the market. Now has been adjustments here and there, so these numbers could be adjusted, and if they are adjusted in a favorable outcome overall, then you can see the share price climb for sure. Now again, it depends on how they hit these numbers in terms of Q2. What will they come out as? Are they going to beat the street estimates, which relatively speaking they are in the ballpark of what BlackBerry provided, and at the same time not too far out where BlackBerry can beat those street estimates. In essence, just hitting on the high end, they'll beat street estimates, have good earnings, and if the operating cash flow is not too much in the negative, if not more so becomes in the positive, then that'd be great. In terms of profits, reporting profits, it's profitable. And then if they adjust the outlook for the fiscal year in terms of a higher number, in terms of at least, for example, even bumping up the total company revenue and bumping up the approximate cash they'll make for the year. So far, they're looking at about 35 million. So just to run down the numbers in case you can't see them, full fiscal year for 26, they're expecting total company revenue at 508 to 538 million right now, and then approximately about 35 million of operating cash flow usage. Operating cash flow, but the brackets are usage, so negative. So there's that portion. And then one other thing too, before I wrap up the video, because it's relatively short in essence, you could argue. Basically, right now we're sitting at $4.40 US. And if you look at, for example, let's just go for the 6-month graph right about here. You can see that we've been pretty much baselining about in terms of support, upward trend support line right here, but there is a downward trend resistance line. Now, I don't want to state this to make you guys worried because I think this will be fine, but we do have 2 touch points on the downside, and there is hypothetically resistance at $4.70 to $4.80 range, give or take, for let's just say $4.90, resistance with this downward trend resistance line. The reason why I'm mentioning this though is if you go to the alt chart, I believe it was right about, not the alt chart, 5-year chart, I think, yeah, 5-year chart, and then the alt chart too, actually, there's one thing too. So you can see upward trend support level, downward trend resistance line, and then at the same time, right about here, we're hitting a 200-day moving average on the 5-year chart. But again, the main concern, in my opinion, I don't believe this is going to be too much of a concern, just because we're pretty much at it right now, plus earnings is coming up. But we're at the 200-day moving average resistance level currently at the current share price of $4.40, but more so for the alt chart. So I guess it got adjusted a little bit. It was a little bit easier to see earlier. I think something got put off here. But either way, hopefully you can see what I'm looking at, which is downward trend resistance line right about here, collides with the 50-day moving average on the alt chart, which coincidentally is around, when I checked, yeah, $4.86. So for $4.86, most likely probably what will happen is if we keep at this momentum up until earnings, I don't think we'll pass $4 and let's say $4.90. Hopefully we do, that'd be great. Keep up the momentum. But essentially it'll be up to the earnings itself. So if the earnings is a home run, basically, then these limits will not be an issue in terms of the downward trend resistance line with the 2 touch points, as we saw the spike ups right here. And then that previous all 50-day moving average won't be an issue as well, because it pretty much collides with this downward trend resistance line. How high we'll go, it's kind of difficult to predict, because again, it's all based off the numbers. In terms of stabilizing, BlackBerry stock seems like to be stabilized. It's just more so the market just wants to see these numbers come in and actual growth. So if they show growth and give a good forecast, then pretty much going to climb, basically start going up to the upside overall for the most part. Until then, just market just wants to see that for the time being. But again, in my opinion, I've said this multiple times in the previous videos, the company is moving in the right direction. I do like the team overall; they're doing a great job, and for the most part, they seem to stabilize. And they've cut costs quite a bit, did well, and moving forward in a great direction. Hopefully they continue that path, and hopefully they do a great job. Again, I do own shares in the company, so be mindful of that while you're watching this video. And I'm not a professional, so please do own due diligence and research before buying and selling. And I'll see you guys during the live stream, conference call, and all that stuff. Thanks again for watching. Take care. God bless, and peace.